Hello, I'm here today with Simon Gergel, Fund Manager at the Merchants Trust. Simon, welcome.
Hello.
Could you start by just giving a brief outline of the Trust's objective?
Yes. Well, the objective of the Merchants Trust is to deliver a high and rising income stream from investing in predominantly high-yielding UK companies.
And what's the profile of your portfolio?
Yeah, well, the portfolio is invested in UK companies. About 70% is in the very largest companies, the top 100. The rest is in medium and smaller companies. And we also borrow money. We borrow money on the very long-term debt market to invest in the UK equity market as well.
And how do you go about selecting the investments for the Trust?
Yeah, well, we ask ourselves three questions. We look at businesses, we try and work out how strong is this business, what is its competitive advantage, how attractive is the industry it's in, what growth rates it got, and also how strong is the financial position and the strength of the management and so on. The second question we ask is how cheap is the business? We want to buy good businesses that are attractively valued, and to do that we look at the valuation compared to its history and compared to other companies we can invest in. And the third thing, because we're in a dynamic world, is we try and understand what's going to change. So we look at where we are in the economic cycle, how strong the economy is, where we are in that industry cycle, and what demographic changes or what structural changes might affect the company. So, for example, if the internet is a threat to the business or an opportunity. And so we bring together those three factors, the strength of the business, the valuation, and the dynamic environment, what's changing, to really try and find good companies that are attractively valued and well positioned for the future.
Now, is it a challenge to maintain the Trust's 32-year record of dividend growth?
Yeah, well, one of the good things about investment trusts is you can put away reserves. In the good years where income is strong, you can tuck away some reserves to dip into them in the tougher years. So as we went through the financial crisis and dividends were cut in the market, we were able to dip into those reserves that had been put away for over many years in order to keep growing the income stream for our investors. And now we've come through that phase and we are actually growing our income again and putting money back into reserves, putting them away for another rainy day. So that's been quite a good feature of investment trusts, so we've been able to go through that.
And looking at the current market background, are you still finding interesting investment opportunities?
Yes, we are. I mean, it's to be honest, it's more difficult than it was 2 or 3 years ago because the market has revalued. But there are certain areas that look interesting. The very largest companies, I think, structurally have been left behind a bit by the market rally, which has been predominantly in medium-sized companies. So many of the very biggest companies like Glaxo, Royal Dutch Shell, HSBC look quite attractive. And then the other area where we find opportunities are in recovery situations. Companies where there may be a short-term problem or the industry may be going through a difficult patch, but where we see longer-term value. And the market often doesn't value those companies, in our view, correctly because they're too worried. The market seems to be too worried about short-term risks rather than the long-term opportunities. So those two areas are where we're finding the best opportunities at the moment.
Simon, thank you very much for joining us today.
Pleasure, thank you.
If you'd like any more information, please visit the Edison website.